It's Thursday, it's almost midnight, and Intel has just announced their financials for Q3. This is going to be an interesting video. What's your minimum specification? As anybody with investments will know, companies will have to announce their financial status every quarter and every year. And in those financial calls with financial analysts and the markets, they'll talk about where they're spending their money, gross margins, profit margins, R&D, share buybacks, free cash flow, how the products are doing, where the products are going, maybe some roadmap talk and all of that. Today, Intel announced their Q3 results, and they're kind of interesting. Let's start by looking at how the shares are doing after market. That doesn't look good, does it? Going down from 53.90 at end of play, and we're down to $48. So, if we look how it's performed over the time, 5 days, we were peaking at 55. The whole past month, it's slowly been going up. If we look at the 6 months, we see this dip, 23rd of July, going from 60 down to 50. I think that aligns with the last call where Intel said that there was going to be a delay to their 7 nanometer. And then since then, it's slowly come back up to 53. But as noted, it's gone down to 48, down 10% again. So this is going to be interesting. Obviously, it means market cap is a bit lower. And this comes down to the earnings. So, first item here going to present is the financial results, Q3 financials. This is an infographic Intel puts out just to kind of summarize all the financials. And it's going to be, as positive as it can be, because obviously they want to paint Intel in a good light. So Q3 revenue, we've got PC-centric. So Intel has two halves of the business. One half it calls PC-centric, the other half it calls Data-Centric. And the idea is that the company should be about 50-50 on each. And it had been moving that way to the point where I think in the last financials, Data-Centric was actually, for the first time, slightly higher than PC-centric. So PC-centric, which is a client computing group, so that's laptops, desktops, basically anything not enterprise or specialty like networking or AI or cars and that sort of stuff. So PC-centric 9.8 billion, up 1%. Data-centric 8.5 billion, down 10%. So 18.3 billion revenue, which is down 4% year on year. So that's comparing Q3 to Q3 last year. So they're down. Now, obviously, COVID and everything, just keep that in mind. Demand has been lower. So what they're saying is here, client computing group, 9.8 billion, up 1% year on year. Data center group, DCG, which will be the Xeon CPUs and stuff, down 7%. Internet of Things, down 33%, but this is only a small fraction, 677 million. Mobileye, their automotive. Mobileye's actually been doing really well quarter to quarter of late. So 234 million. It's still small change in the grand scheme of things, but the trajectory has been going up. Non-volatile memory solutions group, NSG. So this will be NAND and stuff, 1.2 billion, that's down 11% year on year. Now, Intel just announced the sale of their NAND business to SK Hynix for 9 billion. So that will be going on, and so part of NSG will obviously come away. Then we have Programmable Solutions Group, PSG, which is all the FPGAs, the kind of Altera stuff. 411 million, that's down 90% year on year. The note from Bob Swan, our teams delivered solid third quarter results that exceeded our expectations despite pandemic related impacts in significant portions of the business. 9 months into 2020, we're forecasting growth and another record year, even as we manage through massive demand shifts and economic uncertainty. So massive demand shifts, over the previous few quarters, Intel's been promoting record revenue because they've had such high demand for their Xeon processors. So demand shift during the pandemic means that that's all come down. We remain confident in our strategy and the long-term value we'll create as we deliver leadership products and aim to win share in a diversified market fueled by data and the rise of AI, 5G networks and edge computing. So this is all about Intel trying to diversify its portfolio outside of CPUs, outside of being CPU only, leveraging its manufacturing and it will come out as we go through this. So full 2020 outlook, expecting overall growth in both PC and Data-Centric of mid-single digits. Fairly average growth for an investment. 75.3 billion revenue, up 5% year on year. And cash and dividends year to date. Highlights: launched 11th gen Intel Core, so that's Alder Lake. They're expecting 100 laptop designs by the end of the year. 10 nanometer is accelerating, so producing just more 10 nanometer, ramping up as they feel more confident with yields and costs. This one is really interesting, shipping Intel Iris Xe Max discrete graphics. So this is Intel's first discrete graphics solution with their Xe architecture. It was announced, yesterday, the day before, that Acer is going to be producing the Acer Swift 3X with this graphics card. Intel hasn't said anything to the press yet about it. So it's really interesting for a new product to be announced in this way. What Iris Xe Max is, we don't know. It seems to be sort of thin and light type. Related to DG1, different die to DG1, we don't know. They're not talking about it yet. We expect at some point, right? And then launched Mobileye Supervision for ADAS. This is going into the automotive design as well. So along with this infographic, this is just meant to be the very quick overview. And, it's, and this is just the infographic. This is just meant to show basic overview if you don't want to read the whole thing. And it sounds, there's a few negatives here. Somebody might say Internet of Things group going down 33% year on year is a bit of a drop. Data-Centric going down 10%. That's pretty significant. PC-Centric up 1%. Perhaps we didn't expect it to go up 1%, in revenues. Though obviously the devil is in the details. Now, along with these presentations, there will be prepared remarks. This is like the opening statement in a financial disclosure like this. And we have Bob Swan's prepared remarks. Let's zoom in. I'm only going to read some of this, where it's important. So, we delivered solid third quarter revenue and profitability despite increasing COVID-driven headwinds affecting significant portions of our business. Led by strong consumer notebook demand and continued cloud growth, we generated $18.3 billion in revenue and delivered $1.11 in earnings per share. We exceeded our top line expectation by $133 million and our bottom line expectation by 1%. 1 cent. I am incredibly proud of employees' performance. Our team has really come together as one Intel. Over the last couple of years, we have focused on 3 critical priorities: improving execution and strengthening our core business. Okay. Extending our reach to accelerate growth in the company and continuing to thoughtfully deploy your capital. Third quarter progress. First, improving our execution to strengthen our core business. This quarter, we launched 11th gen Intel Core Alder Lake with Intel Xe graphics. This is the world's best processor for thin and light notebooks. In real world workloads versus competitor products, 2.7x faster content creation, 20% faster office, 2x faster gaming plus streaming. I'm excited to announce we now expect 100 Alder Lake designs, double what we expected in April. Breakthrough architectural improvements in CPU, graphics, AI, and software, combined with newest 10 nanometer superfin. Delivers the largest single inch-node performance improvement in our history. I agree with that. Company Alder Lake, also we have Evo Designs. Turning to our data center business, we and our customers are excited about the upcoming launch of our 3rd gen Intel Xeon Scalable product, Ice Lake. We're targeting qualification at the end of Q4 with volume ramp shortly after in Q1. Okay, so this is interesting. We are expecting Ice Lake Xeon Scalable by the end of the year. It looks like Intel's only going to go through qualification with customers by the end of the year, and the actual volume ramp will be in Q1. General availability will either probably be at the end of Q1 or therefore Q2. So it's completely slipped whatever 2020 or prior deadline that they used to have on these products, which is going to be interesting because 4th gen Xeon Scalable, Sapphire Rapids is also meant to be a 2020 product. And if this one's coming out, end of Q1, beginning of Q2 for general availability, you gotta wonder, why would customers necessarily bother unless they're already really deeply invested in the Ice Lake product? Or deeper discussion about how Intel's ability to build Sapphire Rapids and also execute that on time, may mean that, Ice Lake's around for a while, but I mean, we can get into some of this. Then Oracle announced they will leverage Ice Lake in cloud-based high-performance computing instances with Oracle Cloud Infrastructure. How many people use Oracle Cloud Infrastructure? Combination of 3rd gen Intel Scalable and other improvements in X9 instance can drive 30% high performance gains on current workloads. Okay, that's going to be interesting. CPUs are foundational business, but also adding XPUs. Great strides in graphics and now scaling architecture. Our first discrete GPU, DG1, is shipping now, so Iris Xe Max is DG1, and will be in systems from multiple OEMs later in Q4. I think the Acer one is definitely coming. I think they said China in October, so by the end of the month. We also powered on our next generation GPU for client, DG2. Aha, okay, so DG2, next graphics is powered on. That's good. Based on our Xe high-performance gaming architecture, the product will take our discrete graphic capability out the stack into the enthusiast segment. So if they're powering on DG2 now, we should probably expect it middle to end of next year. Maybe perhaps towards the end of next year. Come back Computex in June, or perhaps a bit later. Beyond the CPU and GPU, customers tell us they want a diverse range of AI solutions, purpose-built XPUs, leverage standard programming. Then we go over the acquisition of Habana Labs, proof of concepts with several major cloud providers on Habana's training card, which I believe is still made at TSMC or Global Foundries. And then Superfin, Department of Defense awarded the second phase of its state-of-the-art heterogeneous integration prototype program, or SHIP. Software is essential. 15,000 software engineers, which is more employees than AMD, I want to say. AMD Wiki. How many employees does AMD have? 11,400. Okay, so Intel has more software engineers than AMD has employees total. And they're very proud of that. And, that's also a good thing, optimizing software. NAMD, molecular dynamics solution, now AVX 512 accelerated, which is also a good thing. And then, One API is on track. Spec 1.0, 1.0 of One API launched in the third quarter, and the full gold release in the fourth quarter. Accelerate our growth, actively executing a diversified growth strategy, several multi-billion-dollar businesses fueled by data and the rise of artificial intelligence, 5G networks, and the intelligent autonomous edge. Created OpenVINO, opportunities created by 5G, so 5G deployments. First fully virtualized end-to-end 5G data session, Intel's vast portfolio of products, including Xeons, FPGAs, Ethernets, FlexRAN software reference architecture, and years of experience in virtualization. Mobileye business, year to date, 29 new designs, 26 lifetime units. Announced collaborations with Geely, AHD, and Willa. I've heard of Geely in China. And then finally, we are always mindful of our role in thoughtfully allocating capital. This week we signed an agreement to sell SK Hynix our NAND memory business for $9 billion. We believe this is a fantastic win-win transaction that allows us to focus our energy on investment in differentiated technologies. I'm always weirded out by these sorts of comments because it's like, we want a diversified product portfolio, but we're going to sell this business to focus on our core strengths. But diversified business portfolio, but core strengths, but it's a cycle. As part of this, you may have read, Intel is retaining Optane and continue investing in Optane. though Intel has never separated out its Optane revenues from its NAND revenues, so we don't know whether Intel's profitable on Optane. So we have also significantly improved supply for our customers. We've expanded our capacity by more than 25% in 2020 and currently have 3 high-volume fabs producing 10 nanometer to meet our customer demands. Okay, this is going to be an interesting point because I think this is quite different to what the PowerPoint presentation says, which we'll go through. Earlier this quarter, we also entered into accelerated share repurchase agreements to repurchase 10 billion in stock. So they sold a business for 9 billion and they're buying back 10 billion worth of stock. Okay. Maybe good for financials. I'm not sure whether it's necessarily that good for R&D and investment into next generation technologies, but we'll see. Guiding principles we use to deliver most value for our customers. Our overarching and most important priority is to deliver a predictable cadence of leadership products. To say that Intel's product cadence is predictable in the last 2-3 years is an understatement. A few years ago, we decided that an architectural shift to die disaggregation enabled by differentiated advanced packaging would be a potent tool for employing the best technologies that we and the ecosystem can provide. This is them talking towards chiplets, but they don't want to mention the word chiplet, because if somebody mentions the word chiplet with Intel, then the whole glue conversation happens again, despite glue being a form of, glue logic to connect. I think I've said my piece on that many times. We also realized that delivering on this promise meant engaging in the ecosystem in a different way, treating equipment and EDA providers and third-party foundries not as suppliers, but as strategic partners. So we're competing with you, but we also want to do business with you. It's a whole, Qualcomm, Apple thing and modems and power ICs and everything like that. Strategic partners that we can learn from and help us solve customer problems. Now that we have more flexibility in whether we make or buy diareses for whatever reason, or whether we make for others. There's been some rumors that Intel's going to move back into the foundry game. Their previous attempts at foundry business, as by foundry I mean using their manufacturing facilities to build products for other customers. It's TSMC's business model, but Intel tried it once and never really got anywhere because Intel's really proud of its manufacturing facilities. So you have to be deep ingrained with your technology in order to be able to, you need to be deeply ingrained with Intel and its technology, and there has to be a lot of licensing agreements, and basically very few companies signed up to it last time, and those that did backed out when Intel couldn't deliver 10 nanometer, as far as I'm aware. Many of our future products can no longer be described as manufactured inside or outside as being a large core or small core product. Okay, manufactured inside or outside. Now, just to be clear, Intel's been a customer of TSMC for 10, 15 years. That's, whether it's still making FPGAs from Altera or whether it's power ICs for various products, they're manufactured at TSMC. So these products will take advantage of hybrid architectural approaches and the universe of IP developed both inside and outside the walls of Intel. Hybrid architectural approaches is mainly a nod towards the packaging and being able to use different process nodes. Universe of IP developed both inside and outside the walls of Intel. If they're just referring to manufacturing and using TSMC's manufacturing expertise, fine. Whether it's actually deploying outside IP via license or acquisition, that's, a bit interesting. Intel manufacturing. Okay, as I look to the next several years of products, I'm excited about the products we have coming. We are now sampling our 2021 client CPU, Alder Lake. Okay, so Alder Lake coming 2021, and is definitely a client CPU. No more details. Client either means desktop or it means laptop, so it could be either. We'll be sampling our 2021 data center CPU, Sapphire Rapids. Okay. So Sapphire Rapids definitely confirmed for 2021. they had a contract with Aurora to do it in 2020. So the fact that it's sampling in fourth quarter, so a few units will go to Aurora. I wonder how much Intel has lost on that contract. And both will deliver significant capabilities enabled by our 6 pillars of information, our enhanced superfin technology. So this is enhanced superfin is originally what Intel would have called internally 10 plus, and then they moved to 10 plus, and now it's enhanced superfin. Enhanced superfin from now on. We have another great lineup of products in 2022. And I'm increasingly confident in the leadership of our 2023 products. We deliver on either Intel 7nm or external foundry or a combination of both. There's a quote by Bob Swan I'll reference later, about this. Or maybe I'll bring it up now, actually. Bob Swan in the Q&A said, when asked, you'll have to make bets on whether you invest in 7nm equipment soon because of the lead time on how, if you want TSMC products, you have to order them, 10, 12 months in advance, or at least get the designs down and stuff. Bob Swan said early 2021 is a time when we will have to make the determination whether we invest more in 7nm equipment or we add third-party capacity. So Q1, if we see an uptick in Intel spending on equipment for foundries, then we can know that they're going more down their own 7nm route. If the spend is less, then they're going to be shifting that more. But it says here, I look forward to providing a further update on the January call. And then again, another diaresis after the full stop. I don't know what that is. Just a little context on the year. 2020 has been the most challenging year in my career. So Bob Swan is a former finance guy. He's former CFO. He's not an engineer. So when he's saying the most challenging, he obviously means the most financial challenging, I guess. With a global pandemic, geopolitical tensions, challenging business principles of globalization and social unrest. Despite all of this, we'd expect to deliver the best year in our 52-year history. We plan to grow revenue by 1.8 billion, more than our January expectations, even as COVID has significantly impacted our business mix. Full year gross margin will be down 2 points versus January expectation. They say versus January expectation, but against Q3, we'll see. Primarily driven by acceleration of our 10nm based products and a change in mixed products. Driven by acceleration of 10nm based products. So 10nm coming sooner than expected? But I thought it was being delayed, and it has been delayed. What? I don't know. We've maintained spending discipline even as we invest in our workforce, communities and supply chain to combat COVID. An decision we made to sell our NAND business will drive 1 or 2 points to non-GAAP gross margin accretion through the year. We are mindful of your capital and made decisions to increase shareholder value, through our ASR and increase dividend improvement management of our Intel Capital portfolio. The bit we don't usually hear about on the tech journalist side is Intel Capital. I was invited to their event last year. It was amazing. I couldn't write it up because I went there on the way to a briefing for a much more important product. So hopefully when we get traveling again and Intel Capital does that event again, I would like to do a deeper dive on Intel Capital. And now that I have a YouTube channel, maybe we could do some videos. 9 months into 2020, we're expecting to beat our January free cash flow guide by 1.5 to 2 billion. Thank our employees, deliver financial commitments and support our customers. No mention of all the people they had to lay off in data center marketing. Okay, so that was the prepared remarks, and here we have the earnings presentation, which is, this is where some more of the details going to come in. Disclosures, future, everything else. So executive summary, these are all the positive points: beat quarterly revenue and EPS expectations. Shipping Tiger Lake, 100 Tiger Lake systems by end of year, double April expectations. Announced sale of NAND business to SK Hynix, initiated 10 billion accelerated share repurchase. Again, 9 billion, 10 billion. More damn diareses. Okay, priorities. Now this is a really interesting slide. So CPU, again, 100 Tiger Lake designs by end of year, 40 plus Evo designs, targeting Ice Lake server qualification by end of year. Targeting? I thought they were confirming qualification by end of year. Okay. Volume ramp shortly after in Q1 2021. So again, general availability, end of Q1, beginning of Q2, completely blotting any 2020 timeline. Beyond the CPU, shipping DG1 GPU for revenue, that's the Iris Xe Max. Powered on DG2, which we've covered. Habana's AI reference now shipping in trials with major CSPs. Sorry, I keep scrolling. 6-pillar capabilities. Superfin delivers largest single intranode enhancement in Intel history. One API, DoD ship. Okay. Extending our reach to accelerate growth. So this is, expanding into new markets, but the sale of SK Hynix was to focus on core markets. Okay. OpenVINO related edge design wins up 5x. That's because OpenVINO's got more mature. Verizon's first fully virtualized 5G data session. Just a single session. How that will expand through Verizon's portfolio, unsure. DCG adjacencies. So Data Center Group revenue up 34% with strong growth in 5G solutions. I assume that's in Snow Ridge, which is their 10 nanometer 5G base station chip thing, mobile ideals. And then deploying capital, we have sale of NAND business, 10 billion share repurchase, year-to-date cash flow, cash from operations 25.5 billion, free cash flow up, paid dividends of 4.2 billion. Okay. All the positive stuff. Delivering customer value in our products. Predictable cadence of leadership products. Yeah. Not so predictable in my mind. Preserve and extend the advantages of IDM. The advantages of IDM have been iffy, as we know, because of 10 nanometer and 7 nanometer. We still want more detail on 10 nanometer Intel, please. Investing in technology leadership. You can take that one of two ways. One, investing more R&D, which they're not really. I mean, in terms of actual dollar signs. Or investing in leadership, bigger bonuses for the executives. It's probably not what that means, but, I could take it that way. Steps we have taken, differentiation through 6 pillars, transition to die disaggregation, again, chiplets, industry advanced packaging. So this is, die-to-die stacking with Foveros and EMIB and all those things, embracing industry ecosystem, adopting hybrid architecture and manufacturing. So that's Lakefield, and we assume Alder Lake is hybrid as well. Increasing flexibility and optimized capital intensity, leadership products in 21 and 22. 21, so Ice Lake, Alder Lake, leadership products, interesting to see. And 22, Alder Lake and Sapphire Rapids sampling this year. Wait, I thought they were sampling next year. Confident in 2023 product leadership on either Intel 7 or external Foundry or mix of both. Predictable cadence of leadership products across segments through 2023. Interesting what consumer products after Alder Lake will be in 2022. No word on that yet, at least no official word. And then, predictable cadence. If Intel slips further, they're going to get nailed to the wall on this. Arguably, I don't understand why they're even saying this. Is it because their competition is producing a predictable cadence? I don't know. Okay, so financial highlights. Revenue down 4%. Data-Centric down 3 points year on year to 46%. So it used to be 49, now down to 46. Q3 revenue 18.3 billion. Direses. Data-Centric 8.5 billion. Direses. PC Scenario 9.8. Okay, we've covered that. Q3 operating margin 29%, down 6 points. 1 point below expectations. I mean, we know they were going down, but to see it under 30% is crazy. Is AMD at 35%? I don't know. Delivered Q3 EPS of 1.11 even. 1 cent above expectations. So it's still down year on year. And then, we have, so PC-centric revenue up 1%, data-centric revenue down 10%. Q3 results slightly above expectations. EPS, earnings per share down 22%. So strong notebook demand and increased server volume. I think we'll see that in a bit. Average selling price down on mix, shifts in data center and client. This means that customers are selecting the cheaper products from Intel's portfolio. pricing pressure from competition or stock levels or stuff like that usually goes to that. Increased units, enterprise and government to cloud. Enterprise and government revenue is down 47%. I mean, we'll get into that in a bit, but increased units, but down in revenue. Leads to the ASP. Commercial to consumer, desktop to notebook, increased entry and education volume. So the work from home stuff means lots of items like Chromebooks were being sold, and they're typically, low ASP devices. Client 10 nanometer acceleration and lower inventory reserve releases. Adjacencies, NAND ASP growth and improved unit cost, but they're selling the NAND division, and then capital allocation, higher tax rate, largely offset by share buyback. Uses and sources of cash. So, cash from operations, capex, dividend, buyback, that's quite substantial. Net debt, other, 18.3 total cash investment. Total cash investments up, total debt up. So data center group, here we go. So let's start on the right hand side. So just comparing quarter to quarter or year on year from Q3 2019 to Q3 2020. Platform in data center group down 11%, adjacencies up 34%. Cloud up 15%, enterprise and government down 47%. Communications up 4%, and then the whole DCG platform unit volumes. So amount of chips up 4%, and then average selling price is down 15%. And here we go, operating income down 39% year on year. So 3.1 billion to 1.9 billion, and the operating margin down from 49% to 32%. If any other company, any company did that in a normal year, you would wonder what the hell was going on. Either a competitor came out with a competing product that just totally wins, or revenue billion down 7% year on year, just for the data center group. Didn't it say 10% before? This is just DCG, sorry. The Data-Centric also includes others. So revenue down, impacts to enterprise and government. ASP down on 93% year-on-year increase in SoC volume and customer mix. Operating income down on mix-driven ASP decline and higher costs related to 10 nanometer ramp of 5G SoCs. So 5G SoCs, we're assuming that they're meaning Snow Ridge again. So higher costs related to 10 nanometer ramp. That makes you wonder if yields of Snow Ridge are low, and in order to meet the demand from customers, they're just having to produce more. And I don't know, is Snow Ridge a loss-leading product in that regard? Intel won't say, obviously. Other data-centric business segments, revenue down 18%, IOTG down 33%, and so revenue down 30%, operating income down 80%. Due to COVID and US government entity list impacts. Mobileye revenue up 60% quarter on quarter and 2% year on year. NSG, non-volatile solutions group, revenue down 11% on bit decline, partially offset. Higher operating income on increased ASPs and unit cost improvements. But again, this is the NAND business. Operating income actually going from a negative to a positive despite the lower revenue. That's a good thing. I'm surprised that wasn't highlighted, but given that the NAND business is going, maybe that's why it is being highlighted. And then Programmable Solutions Group, revenue down 19%, operating income down over half, down 57%, on lower revenue and product mix. Client Computer Group, so this is your desktop CPUs and your laptop CPUs. Revenue up 1%, mostly on the platform side. Platform up 5%, modem/adjacencies down 18%. So Intel still makes 4G modems, and obviously as those go away, we're going to see less revenue there. Notebook revenue up 16%, desktop revenue down 16%. So notebook revenue up. Most of Intel's solutions that we're seeing coming through are higher cost solutions, so that may be a reason. Intel also has a strong commercial notebook segment as well. Then we have desktop down 16%. That we know Intel's getting price pressure from AMD. Be interesting to see how that grows. Though that being said, PC volumes 11% up year on year. Notebook ASP is down 7% year on year. So actually the price of the notebook chips is going down. And then desktop ASP is flat. So they're still selling roughly the same price mix. Revenue up on record notebook unit sales, partially offset by a mix shift from commercial to consumer. So yeah, they're clearly selling more consumer parts, and this, lockdown and working from home, and then increased entry and education volume, lower operating income on 10 nanometer acceleration and product mix. So again, Intel seems to be making less money on 10 nanometer per unit. That's what I'm reading. So, okay, outlook for Q4. Revenue down 40% year on year. PC down low single digits. And they're expecting Data-Centric down 25%. That is horrific. I mean, we're expecting AMD to start talking about third gen EPYC, Zen 3 EPYC. So, I mean, that necessarily won't be affecting Q4, but I don't know. I've got to wonder why, I mean, aside from enterprise and government, I don't think customers are feeling that focused on Intel's ability to deliver gen-on-gen roadmap executing on time. Operating margin 26.5%, down 9 points year on year. And gross margin 55%. Excuse me. And then EPS down again, and tax rate of 14.5%. Wouldn't you like to pay a tax rate of 14.5%? Full year, they're still expecting increase 5%. PC-centric up single digits. Data-centric up mid-single digits. Operating margin down 31.5%. General margins, gross margins, 57%, down 3 points. EPS up, similar sort of tax rate, 14.5. Then free cash flow up and capital expenditure up. So through 2020, revenue up. COVID-driven catalysts for notebook PCs and cloud, headwinds to desktop PCs, enterprise, OTG, PSG, and Mobileye. OTG's down, Mobileye still growing, PSG's down, enterprise and government way down, desktop PCs flat. Accelerated ramp of 10 nanometer products. So here they're saying volume expectation up 30% versus January. In the prepared marks, they said 25% up overall, but increased 10%. So now they're saying specifically 30% with 10 nanometer. Yeah, I can't keep track of that either. COVID-driven mix shifts ASPs in client and data center. Full year spending to revenue 25%, down 2 points. Sale of NAND business, share buybacks, and Intel capital portfolio. And then here's some more numbers. We have the full earnings release as well. Let's zoom in a bit. This says almost the same thing, but in, actual numbers. Net income down 29%, or 26% on the non-GAAP. And then, here's a more breakdown of data-centric, PC-centric. So Mobileye was the only plus point in the data-centric group. And we have some Tiger Lake. More than 150 designs from major PC makers are in development, including 100 designs by end of year and 40 under Evo. Intel's third 10 nanometer manufacturing facility, which is located in Arizona, now fully operational, and the company now expects to ship 30% higher 10 nanometer product volumes in 2020. Okay. That's more of a clarification, where it wasn't necessarily clarified before. And then, outlook for Q4, full year, and details and statements. So, yeah, Intel. I don't know. A few other things came across my path. So the financial call is Bob Swan, the CEO, and George Davis, the CFO. These guys are both finance guys. Bob was the former CFO. In the investment call, ever since Murthy Renderton Charla left, or was forced out, depending on what your view on that is. They haven't had an engineer in these finance calls. And ultimately, the financial analysts always ask about manufacturing and ability to deliver. And I have no idea why they don't have somebody from the engineering side. Was it Anne Kaliha is in charge of manufacturing now? Why isn't she there to talk about manufacturing? So points, shipping DG1 for revenue, power on DG2. Mentioned that the DG1 for revenue, no press engagement on that so far. So it's really weird to have that come out in a financial call. Spoken about the 30% higher 10 nanometer volumes. One thing I would point out is nobody knows what these volumes are. There's been talk about whether that's, 10,000 wafers, 50,000 wafers, 100,000 wafers. And you've got to wonder, compare that to the 14 nanometer volumes. It still feels like chump change, but Intel won't mention what the volumes are. The issue here is when they say that a manufacturing facility is enabled for 10 nanometer or manufacturing 10 nanometer, that doesn't always mean that all of that manufacturing facility is doing 10 nanometer, or even they have the capacity for the whole factory to do 10 nanometer. If you have a fab that does 100,000, that can do 100,000 wafers starts per month, but you're only running it at 10% capacity, then you're only doing 10,000 wafer starts per month. I mean, you can say this production facility is manufacturing wafers, but if it's only at 10% utilization, then you only get 10% of the wafers. Interesting if Intel would ever divulge the numbers on that. Probably not. Excuse me. Enterprise and government market segment, 47% year on year again. We've mentioned sale to SK Hynix, buybacks, desktop revenue down 16%, Notebook ASPs down 7%. Ice Lake qualification end of year. It said hopefully by end of year or expected by end of year. That's not a firm commitment. That's really not great. And then volume ramp shortly after in Q1, probably Q1, Q2. They confirmed Sapphire Rapids is sampling in 2020, but actual product will be 2021. Bob Swan, I said this before, but when it comes to investing in 7 nanometer equipment, they'll need to make a decision early 2021, and we'll hear more about that on the January call. They said our server roadmap has been consistent for the last 18 months. Not really. I can't believe they said that, really, to be honest. We'll see how Ice Lake turns out, I guess. And one thing they also said in relation to a question from one of the financial analysts, it was asked, well, okay, if you move some products to TSMC, how easy is it to move them back? And I can't remember whether it was Bob or George. Again, they're both finance guys. They said, we feel confident we can port out to TSMC or port back in. Now, the processes aren't similar. The EDA tools are different. Porting essentially means, okay, you know the layout, or you know the high-level floor plan of what you're designing, but you still need to go at the transistor level and build up your macros and build up your floor plan and then do validation. When they say port, they mean, okay, high-level design is done, but high-level design, okay, you could be shaving a few months, 6 months off your full design process, but porting in and out just isn't that quick, especially when you're talking to TSMC and you have to put your orders in 6, 8, 12, 15 months in advance, especially for leading edge stuff. I mean, is Intel engaged with TSMC for 5 nanometer? We've got Apple and Huawei already with their 5 nanometer chips ready to go. I don't know, it's a tough one. I was listening to most of this call and I was going through the slides as they were talking, and perhaps a few of you saw me on Twitter with a few others going back and forth about what this actually means for Intel. I mean, they're saying they beat expectations, but the expectations weren't rosy to begin with. And I think things like enterprise and government down 47%. That's pretty substantial. Saying things like, Data-Centric revenue down 10%. That's substantial. Yeah, overall revenue is higher and you got your share buybacks and you sold your NAND. I didn't. Two things I want from Intel in the future, which isn't coming across at all in these sorts of presentations. One, the ability to be humble, to acknowledge mistakes, but also, identify strengths, and use the synergy between those as a promotional aspect moving forward. And second is just an element of sincerity, honesty, truthness, and accuracy with some of these expected product launch windows. Acknowledge the fact that Ice Lake is delayed. Acknowledge the fact that you said Aurora would be delivered in 2020 and now it's 2021. Acknowledge these things. Intel has been in the lead for so long. Despite, record revenue, growing, beating expectations, markets reacting the way they have done in the last two calls. There needs to be some attitude change there. And a lot of people will point to the fact that there needs to be a more senior engineer on these calls, explaining the details, knowing the details, knowing the ins and outs, being able to talk technical with the team, whether that's in relation to process or packaging or fundamental aspects about Intel's product portfolio. Speak to what's happening in Mobileye versus Habana versus the Xaltera versus Optane. You didn't mention Optane 4-layer technology or question about Optane. Okay, so R&D is going on in Rio Rancho, but where's the manufacturing going to come? How's the relationship with Micron going on that front? Yeah. Intel's a big company. Now, don't get me wrong. Like we covered right at the start of this video, 15,000 software engineers. That's more software engineers than AMD has employees flat. So, or even leveraging the software positive points and, sales of software and whether that's growing and applicability to HPC market or the server virtualization market or the hyperscalers. I mean, the hyperscaler that was mentioned in this presentation was Oracle. No mention of Google, Microsoft, Tencent. Yeah. Okay. That's where we stand. Interesting to hear what they have to say January, and then obviously what Intel's competitors are going to say through the rest of the year. You've been watching TechTechPotato. Sorry, this has been a long one. Lots to talk about, really. Click the potato if you want to subscribe. It should be over here somewhere. And what's your minimum specification?